And it is time for the word on Wall Street. Top investors watching your money. Joining me right now is Blanke Schein Wealth Management CIO Robert Schein, Rosecliff Capital CEO and Managing Partner Mike Murphy, and Bell Point Asset Management Chief Strategist David Nelson. Gentlemen, good to see you this morning. Thank you so much for being here. Robert, a lot of headlines this morning. Let's talk about oil. Oil prices are pulling back this morning. The U.S. and European Union have announced a deal to supply Europe with more U.S. liquefied natural gas in an effort to cut off Russian supply. Robert, you say that oil prices have much room to move higher from current levels and that we should not write off $150 a barrel. Tell me about that.
Right now, oil seems to be consolidating. If you look at the long view, there's a lot more upside in the energy trade specifically, simply because of all of the different factors that are coming on board. There's geopolitical tensions and uncertainty, as well as here in the United States, we have now just a peak travel season for summer. And if you're like most, everyone's looking at their kitchen table economics. You're seeing the fact that, that's going to eat into consumer balance sheets here in the U.S. It's very concerning. Think about this, Maria. The inflation is political kryptonite. So, we see that the Federal Reserve wants to raise rates later in the year, and they want to be very aggressive sooner than later. But the energy conversation needs to be the forefront. It is here in the United States. Here we're in California right now, and we're in the mid-sixes for gasoline. So that's going to eat into, I think, what the Fed's going to do. It also is going to be on the top of the mind for politicians as they bring back the narrative, potentially, as energy independence needs, that conversation needs to persist. But right now, the fundamentals are supporting higher oil, Maria.
So do you want to buy the actual commodity, or you want to buy oil stocks or energy stocks right here? I mean, energy has been one of the best places to be in this market, right?
Yeah, even 6 months ago for our clients, we allocate capital and we had an energy trade. So we like energy specific ETFs, and we layer that in, and we just keep buying share accumulation. Energy is not overowned, but it's oversold right now, and so there's more room to run. But we like energy, like financials and a few others too.
All right, David, let's talk tech, because that is really where the leadership has moved along with energy. Tech up 2.7% yesterday alone. You say growth stocks have morphed into value because of the sell-off that we saw earlier in the year. Tell me about Meta and why you're looking at that one.
Sure. Market disruptions, have a lot of risk, but they also offer out opportunity. And now you're seeing some of the top value funds. They're picking through the wreckage, and they're picking up what I would call, fallen angels. At the top of that list would have to be a company like Meta or Facebook. Look at the numbers. They don't lie. Facebook's free cash flow yield is well over 4%. On a forward basis, probably closer to 4%. Investment year, you're looking at high teens, double-digit growth again. So despite the challenges from Apple, this is still a company with 10 million advertisers and 2 billion customers. So at well less than a market multiple, the $300 price target that's out there, that's conservative. The next 80 points are clearly up.
Wow. All right. We will leave it there. Great to see you all. Robert Schein, Mike Murphy, and David Nelson. Thanks very much, gentlemen. Have a good weekend, and we'll talk soon.